Good morning, everyone. This is Brad Matheny. Today's the 31st of July. This is the Plan Your Trade video. And let's go over what we have been talking about over the past couple of weeks. So, yesterday, the pop pattern did not move in my predicted direction. And I was clearly posting yesterday afternoon that I was wrong and I was incorrect in my expectations. That happens. I'm going to start off by telling you these SPY patterns are, in my opinion, incredible. What they can do is incredible. What they fail to do sometimes is play out the way I expect because of what I call outside factors. Now, you can go out and you can argue that it doesn't work sometimes, and yeah, that's true. Probably about 15 or 20, maybe 25% of the time they don't work. But the rest of the time, 70, 80% of the time, they work pretty clear and they give us some pretty good direction. So, for example, yesterday's pop pattern didn't play out very well. The previous day's flat down did. Today's pattern looks like a carryover of the pop. We're already up at 49, 549.20. We're opening up in this range. We're likely going to see it rally a bit higher, maybe up into that 552, 553 area. So the concept here is to understand that these give us guidance. They give us clear, what I call psychological guidance, but there's outside pressure that can come in and really destroy the trend. So now, in reference to some people's comments yesterday, what I want to talk about is something very important today: controlling your risks. So now I want you guys to really understand this. Controlling your risks means A, set your trade expectations, long or short. B, drag this out of the way, identify your entry price. C, identify your stop level. D, very important, how much are you willing to lose? E, adjust your position size to match your loss requirement. Oh, related to number D. So, hypothetically, if I'm looking at a trade here, and this is a daily chart, okay, if I see that we're up to 549.25 and I want to try to keep my stop level about $2 lower, I'll do the math with you here. If I want to do the stop level about $2 lower, so entry, do a little example, and here we go. My entry is 549.25. My stop is 547.25. Stop range is $2. Okay, how much am I willing to risk? I know already that's my risk tolerance is $2. How much am I willing to risk? Let's say I'm willing to risk $1,000 right now. Okay, let's say I'm willing to risk $1,000 on this trade. That means I should only be trading. My risk is $1,000. That means I should only trade 250 shares. Excuse me, 500 shares. How do I know this? It's pretty simple. Okay. I know that I'm risking $2 initially on the trade. I know that I'm only willing to risk $1,000 on the trade. That's just safety. That's my own tolerance. So I do the math. $2 equals 1,000. So you take 1,000, divide by two, you end up with 500 shares, given the non-margin of the SPY. It's pretty easy when you're dealing with something like an ETF. It's a much more complicated process when you're dealing with something like futures. If my risk level was tighter, say it was 548, 25. So doing the math here, now my stop range is $1, risk 1,000. So I've got a 1-to-1 ratio. I can trade 1,000 shares. Hypothetically, 1,000 shares, lose $1 is a $1,000 loss. Okay. This is going to be a very solid example of, if you guys are new and you guys don't understand handling risk, I want you to look at this and I want you to think about this every day, every trade. I want you to see how you can control your risk, how you can adjust your risk. If you're not 100% sure, you hear me talk about in the trading systems. If this is counter trend or we're going against the primary trend, then you should cut your risk. So understand, if this would be your normal scenario, maybe you want to come down to here and say, look, I just don't feel comfortable about this. So I'm going to go down to 100. And that's going to give me the idea that I am going to only be able to risk $100 on this trade, simply because I don't feel that we're moving in the direction of trend. So you have the ability to work through this example very cleanly, controlling your risk. And remember, my goal is to make you guys better traders. The one thing that I can tell you is, the two things that I can tell you is this: most traders follow this process. Let's drag this out of the way here. Trading as a long term process. And that is A, most of the time you are waiting for trade setups. B, when a, oh, come on, fingers. When a proper trade setup happens, plan your trade within your risk tolerances. Don't be swinging for the fences all the time. This is not about home run, home run, home run, home run. This is really all about grabbing profits consistently. And in doing so, the easiest way in is to step into a trade very lightly to begin with. And when it goes in your favor, maybe adding a little bit more, grabbing quick profits out of that, and then staging back out of the trade before it turns into a loss. This is not about, banking everything on every trade. You're going to go broke that way. I promise you. C, and then basically let the market drive your decision making and use proper allocation risk controls. So it's really simple, folks. I'm getting these messages from some people that are, this and that and the other, and you're right, you're wrong, what have you. And I do appreciate the other positive comments. And I know people get emotional about doing this, but if you're not following this process religiously, and you are out there swinging for the fences and using my tools and really just, trading like a banshee, going, betting the farm every time, without any major risk controls, well, then yeah, you're going to have some problems, people. I want this to be up front. So I want you guys to really think about this. I'm going to leave this right here for you. I don't know why this is not on top of the bars, but this should be first and foremost in your mind at all times going forward. In fact, I'm going to keep these so that I can drag them, and I will put them in to almost all of my posts. Okay. And we will just move these over here for now. Let's go back over here and take a look. So the market is up at 549.06. Market opens in 10 minutes. Like I told you, I was very late in getting up this morning. I apologize. Today's pattern is the bottom start pattern here in a counter trend rally. Okay, so now we're going counter trend. Trend obviously is down. So bottom trend rally, I would suspect, obviously, with this upward move, would be an upward move into the 549 area. Still very cautious, though, of a potential move that could be slightly counter trending to this. So you can see we are way up here, 549. This is a huge upward move, likely a carryover from what happened yesterday with our pop trigger that never generated. When it and you get something like a news pattern or a news event that comes in and throws the pattern off, it's not that the pattern was wrong. It was that news, think of it as drove price into a certain direction. So I guess the easiest way to explain that is to take a look at a normal, think of like a normal situation in your room. Okay, normal in your house, everything is good, and then imagine a huge vacuum opens up and starts sucking everything out. Well, that vacuum is a disruption, in my opinion. That is not normal. It's sucking everything out. It's sucking the air out. It's sucking your furniture out. It's sucking your your paperwork out. It's sucking everything out. Why is that so important? Well, because when you get into a news event that totally disrupts the market, like those attacks on Lebanon and on Beirut yesterday, that is a device or a process that can overwhelm the psychology of the market. It can overwhelm the price pattern. So what we should have potentially seen yesterday is a moderate melt up. Okay, what we saw was a little bit of a melt up in the morning and then deep selling through the event of the news hitting. Then we saw a little bit of recovery. Now we've got a huge move up into this area, and we're just now getting ready to open. We're in this base rally mode. So here we are, bottom start, base rally, and counter trend mode. Okay, what I suspect we're going to have today, I'm going to just show you. What I suspect we're going to have is we're going to have a move maybe up into 552, maybe 553, where potentially it should have been maybe yesterday. And then we're going to roll back downward a bit, believe it or not. It is a counter trend mode. We are already reverting back up into the pop pattern mode. I think this is pretty much just playing out today in this topping pattern and going to roll downward. So I would look somewhere around this 553 to 555 area for a top, and then rolling back down into counter trend correctional mode, maybe back down to 550, 551. So probably right in this area at the end of the day. And again, I'm going to tell you right now, what I am doing is almost impossible for anybody to do. Okay. And I urge you to try to develop anything like this to be able to predict 3, 4, 5 weeks. Remember, I'm only showing you a small portion of this window. This window goes all the way out to 2035. I've got them mapped out for another 11 years, every single day, every single week. going out for 11 years. Now, are they 100% accurate? I wish they were. And I'm trying to get them to be as much as accurate as possible. But what I'm trying to tell you again is that what we can do is we can use these with some very solid techniques, A-B techniques. Like, for example, I've been warning you for a long time that this dash line is a major support level. So above this level is success into bullish trending. Below this level is bearish trending. Now, as we get above this dotted line, which we are, you have now two confirmations of upward trending. So I would suggest that as long as we stay above this level, you're going to see general bullish trending with the potential for a pullback near the end of the day. Okay. That's what I believe is going to happen today. And I believe it based on my interpretation of the patterns and the disruption of yesterday. Like I said, if you're swinging for the fences and you don't understand risk controls and or somehow you think that I'm some messiah that can accurately predict, 5 weeks in advance and not be wrong occasionally, I'm sorry, you're on the wrong channel. I'm trying to show you what I see, give you my best input, teach you to become better traders. And that's why I've been working my tail end off trying to build these things. Look at this overnight activity. This is beautiful. Having this utility, this is a 5-minute chart. We started out here in a bullish cycle. We were in a bullish trend. We rolled into bearish trending right here at 1400. Ladies and gentlemen, that's 7 o'clock in the morning. We rolled into bearish trending. We rolled into downward trending here. We stayed in bearish trending all the way through. Look, the Bollinger Band system was in bearish trending as well. So we stayed in downward trending all morning long. This is as clean as can be. Bearish, 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 bearish. Look at this and tell me, here, let's go to the end of the day. This is as clean as it can be. This is really as beautiful as you want for a trader. Very clean trending. You had reattack areas here. Get that out of the way. You had a reattack area here. You had a reattack area here. You had a potential reattack area here. Another little minor one right here. Then look at this. We based, we bottomed, we move into moderate rotation, waiting for confirmation of bullish trending. We get confirmation of bullish trending here. This is the first bar. So we move into bullish trending right there. Now we can go ahead and identify upward trends because we're in bullish trending. We're not above the 382 levels, these ultimate 382 levels. So guess what, guys? This is all counter trend. So what is counter trend? Means reduce allocation. So we are in the major trend. We're below the ultimate 382 level here. This is bearish. We are trading in the direction of the major trend based on these ultimate 382s. This is not counter trend. This is a major downward trend. When we're going back up against the trend and still below the major 382 or the ultimate 382 levels, this is counter trend. You want to have a decreased allocation. You do not want to, and I'll add this here. This is really a major, I'll call it major trend. And this is potential full allocation with risk controls. So the theories that I'm trying to teach you are tried and tested. I've been doing this for building systems for over 30 years in this industry. I started in 1989. I was trained by some of the best, Tom DeMark, Larry Williams, Glenn Pring, Jake Bernstein. These are older names. I get it. But the point again is I've been around this industry for 25, 30 years. And what I'm trying to teach you are tried and tested techniques. And I'm trying to teach you what I see. So in this major trend, confirmed bearish trending below the ultimate levels, we're full on bearish. We can go full boat trades. You just want to control your risks. when we're counter trend, you want to be remembered that this is a counter trend trade. This is not yet a full bullish trend. Now, look, as we roll past the end of the day, we get this selling, we roll back, we move above the ultimate 382 levels, we go back into bullish trending. This is now overnight. We're going into late yesterday night, early in the 31st. We're back into solid bullish trending. We're above the ultimate 382 level. This becomes our counter trend area here, counter trend bearish. So half allocation or less, major trend bullish, full allocation or measured allocation for your trades. And now we're sitting way over here and we're going to open up around 548, sitting right over here. This is all bullish trending. So understand, bullish, bullish, and bullish, all beautiful bullish trending. We'll see what ends up happening. And people are asking, why can't you get these tools yet? I am technically still working on some of them. These are only a couple of weeks old. I haven't released them yet because I don't want to release them in a buggy mode. I'm showing them to you. But again, I am still working on them. So I want to make sure the logic is as clean as I can get it and functional before we run out of problems. Okay, I'm almost out of time. We'll talk later. Looks like we're going to get this little peak rollover today, so be aware. Talk to you later.